Hello guys, welcome back to yet another new session on a topic of dissolution of partnership. This is a faculty Sudarshan, and in the previous session we have discussed on the topic of Gardner versus Murray concepts, and we have done the concepts well. Now we are going to focus on the problems related to Gardner versus Murray. So regarding Gardner versus Murray, we will focus on the third question for our discussion under the dissolution of partnership is PQR, where the partners sharing profit and losses in the ratio of 3:2:1. No partnership salary or interest on capital is being allowed. The balance sheet date is 30th June 2022 as given. Then immediately go to the last point and study. Required cash and bank account, required realization account, and partners fixed capital accounts after transferring current and account balances. Then go to this and study. They are following fixed capital as well as current accounts. It means they are using fixed capital system. They are using fixed capital system. So we need to prepare three accounts. First, we will prepare realization account. We will prepare realization account and then partners capital account. Next one is cash and bank account or cash account. So when you're going to approach your examination, okay, whenever you go to approach your examination, on your first page, on your second page, first off is for your realization account. Second page is for partners capital, and here you will write down cash or bank. Or if you want to write it in 3 pages, you will write realization, partners capital, cash or bank. Fourth page will be for your working notes. Okay, if the realization account is going to be very smaller, here you can insert your partners capital, here you will put cash or bank, here you will put working notes. Based on that, you will prepare simultaneous approach if you prepare. Now, come to a question solving point of view. First step is dismantling the balance sheet. So we are going to dismantle the balance sheet. First, all the asset balance will be recorded on the debit sides of the realization account. So we will write down 2 trademarks. I will write short forms. In exam, short form is not allowed for you. 2 trademarks, 2 freehold property, 2 plant and equipment, 12,800, 2 motor vehicle, 700, and they have given current assets as stock, 3,900. Now, 2 debtors, trade debtors. The important points needs to be taken care is here you will only consider this value 2,000. Trade debtors is only an asset. Here the provision what you have created is only a notional provision. Okay, this provision, whatever you created, it is your liability. You are not going to take this value. For asset, you are only going to consider 2,000 as a book value. This provision is a liability item. There is only one liability item showing on the asset side is provision for doubtful debts. Okay, so the provision for doubtful debts is a liability. So you will put trade debtors as 2,000. Next step. We are having provision. Here, if I want to write, I will write down by provision. How much is a provision? 100 is a provision. Next, cash at bank is there. Cash at bank. So here I will write down cash and bank account. They say cash and bank account. I will also prepare cash and bank account. On the debit side, what is the value? Cash value 200. 200. We'll put 200. Next. Miscellaneous losses of 400 lies on R's current account. P and Q on the credit side. R's account is on the debit side. Okay, what they are saying, partners fixed capital account should be prepared after transferring current account balance. It means we'll go for an working note 1. Working note 1, we will prepare on the basis of current account balance. What are the partners' name? PQR.
Yes, sir.
It is PQR. Now, what is the current account balances they are having? P is having
500, sir.
500 on credit side, that is liability side. Q is having
9,000, sir.
9,000 on credit. R is having debit balance of
400.
400. Fine. Now, they say profit and loss account. This profit and loss account should be transferred to which account? This profit and loss should be transferred to which account?
Capital account.
Why capital account? Because if we follow fluctuating capital, we will transfer P&L account to partners capital account. Here we are following fixed capital system. If you are following fixed capital system, only the capitals needs to be shown in the books of the partners capital after transferring of the current account balances. Here they say profit and loss, it is a loss which should be distributed in the PSR to current account balances. Okay, to current account balances, we need to show. As per the fixed capital system, we don't have anything on the capital accounts. We will only have to show capitals. So we will transfer this to current account on PSR. So write down less share of P&L account bracket debit balance. In which ratio? What is the ratio of the partners? 3:2:1. Yes, 3:2:1. What is the value over there? 12,000. 12,000 divided by 6 into 3. It is 6,000. 6,000. Then it will become 4,000. It will become 2,000. Which side? Debit, debit, debit. Okay. Now the values are as follows. Here it will be 5,500 debit, 5,000 credit. Here 2,400 debit. Okay, this is a value you are said. This is known as adjusted current account balance. Adjusted current account balance. Now all the asset side is done. Now go to fixed capital. PQR is given 20, 20, 10. So we will go for capital account PQR, PQR. Now the values are follows. We will write down by balance brought down 20,000, 20,000, 10,000. They say after transferring current account balance, you should prepare partners fixed capital. So this balances will be shown on the respective accounts. What are the respective accounts we will show? It is on the debit side 5,500, debit side 2,400 I need to show. I will write down to current account. In brackets, I will refer by giving working note 1. Here I will put 5,500. Here I will put 2,400. In the same way, I will here write down by current account. Here I will write down refer with working note 1. Once I given working note 1 references, in Q column, I will write down 5,000. Okay, the adjustment is done. Now, the current account balances, we have put this everything value will put loan from P. Loan from P should be transferred to which account?
Capital.
Capital. Capital account. Why it is capital account? Why I need to transfer P to capital? Loan is superior. Loan is completely different from the partners. Even though it is received from partners, even though it is received from partners, wife or anything, partners, spouse, everything. Okay. P. Loan from P. Whomsoever loan. Just listen to my words carefully. Whomsoever loan appear on the liability side should be transferred to realization account and then you should pay it. It should not directly transfer to capital account. Are you able to understand?
Yes, sir.
Whatever the loan appear on the liability side, simply transfer to realization. You need to pay it, right?
Yes, sir.
So we will simply transfer it. So by writing by P's loan, how much? 8,000. Trade creditors by trade creditors 12,400. Then dismantling of balance sheet is over. Now come to disposal of asset. On 1st July, partnership was dissolved. Motor vehicle was taken over by a Q at a value of 500, but no cash passed specifically in respect of the transaction. So we will write down by Q's account. We will write down 500. Immediately go to partners capital, put 500 on the debit side by writing to realization account. In brackets, we'll write down taken over motor vehicle take over. Next, first adjustment is done. Then sale of other assets realized is given. All the values is given. So we will working for a working note 2. What is a working note 2? Assets realized. You are only going to tell the values. So first one is trademark. What is a trademark value? Nil. Next asset is there. What is asset? Next asset.
Yes, sir.
Freehold property, plant and equipment. Freehold property, plant and equipment. Freehold property value.
7,000, sir.
Plant and machinery.
5,000, sir.
5,000.
Next, stock
Stock.
and
Stock, sir.
stock value.
3,000.
Next,
Trade debtors,
Debtors.
1,600.
sum up 12,000, 15, 16,600.
Yes, sir.
16,600. We'll go to realization credit by writing by cash account, referring working note number 2, put 16,600. Immediately go to the cash account on the debit side by writing to realization account by putting 16,600. Next, trade creditors were paid 11,700 in full settlement of their debts. The cost of dissolution was 1,500. So the cost of dissolution was 1,500. So we will write down to cash account. If I want to write it, I will put it as creditors, trade creditors, 11,700. Next to cash account. If I want to write expenses, it is 1,500. Then go to the cash account on the credit side by writing by realization. Bracket is creditors. Another realization is expenses. Expenses is 1,700. What is a trade credit? 1,500. 1,500. This is 11,700. Now expenses is done. You have put the loan from P was repaid. You are repaying the loan. It means write down to cash account. How much you repaid? Entire value 8,000 you repaid. Now go to the account and show by P's loan. How much? Or by realization account. Realization account in any way you can show 8,000. Next, P and Q were both fully solvent and able to bring any cash required, but R was forced into bankruptcy and followed 1/3 of the amount due. What is meant by 1/3 of the amount due? It is only 33.33%. Okay, that is 1/3 value. So everything is posted. First thing, close the realization account. First, close the realization account. Everything we have put. So we will going to sum up the values. Just somebody calculate debit values and somebody calculate credit values. I think so. We are having a losses. I think debit side is higher. 1,400 plus 8,000 plus 100 plus
Credit
500.
is 37,600.
Credit is 37,600, right?
Yes, sir.
Yes. Somebody give me the value for debit.
Debit is 88,600.
Debit is 88,600. Who divestly told it is 37,600 on the credit. Subtract the value
51,000.
51. So the 51,000 should be bifurcated. 51,000 should be bifurcated in the respective ratio of 3:2:1. So write down by loss on realization. What are the partners? P, Q, R. Bifurcate in the ratio. 51,000 divided by 6.
25,500.
25,000.
500.
Next one is 17,000.
Yes, sir.
17,000. Next one will be
8,500.
8,500.
8,500. So this realization loss should be transferred to which account? Should be transferred to capital account.
Capital.
Loss. How much the value? 25,500. 17,000. 8,500. Now the point will come. What they say. This realization loss should be borne by whom? Whatsoever the realization loss should be borne by whom?
P and Q.
Will be the check with my point. I have already clearly mentioned their realization loss should be bifurcated on the basis of the solvent partners. In simple, it is solvent partners. In this question, who are the solvent partners?
P and Q.
P and Q. So it should be bifurcated on the basis of P and Q. They need to bring cash. That's my first adjustment. So I will put by bank account. Okay, by bank account, amount of realization loss. They should bring cash equivalent to the realization loss because it is only a notional entry. Actually, no entry will be passed. So you will write down 25,500. 17,000. Obviously, debit, credit, and all it will get cancelled easily. No, debit 25,500, credit 25,500. Merely there is no entry at all. So that's what the notional entry means. Okay, next. So now come to the next point. First step is done. Now go to the second step. When there is an insolvency loss, it should be borne by whom? And that too for solvent partners. Whosoever are having a debit balance or credit balance. Now you are just going to tally the balance sheet. Now tell me the value. Now I will write down here by bank account because R has ready to realized. R is only able to bring 1/3 of the value, 1/3 of the entire value. So of the amount due. What is the total amount due? What is the total amount due of R? Calculate the debit side value. 2,400 plus 8,500.
900, sir.
10,000.
10,000. 10,900. On that 10,900, how much if I first want to tally the value? Just 10,900 is the total value. Now I'm going to balance it. On that 10,000 is already there. I have a balance of 900. Out of 900, how much I can recover from him directly? 1/3. 1/3 means 300 I can directly recover from them. So 300 is the amount recovered. Amount recovered is 300. Okay, how much from 900? 300 is done. How much is the insolvency loss I am making?
600.
600. This 600, which method I am following?
Fixed.
Fixed capital. This fixed capital, if I am following, it should be merely based on which ratio? Capital ratio. What is the capital ratio? What is here the capitals are? Fixed capital, 20,000. It is merely 1:1. Those 600 will be divided on the basis of 1:1. 1:1 means it is nearly 300. 300.
300.
So they should taken over this. So if they should taken over this, we will write it on the debit side by writing by R's capital account. How much we need to put? 300. 300 we will put. So now all the values will be tallied, right? Whatever the values we have written, it has got tallied. R's capital is done. Now we need to balance the values of P's account. Okay, now check the values of P's account. Which side is higher? Which side is higher?
Credit side.
Credit side. What is the value?
45,500.
45,500.
45,500. 45,500. If I subtract, what is the value I am getting?
14,200.
14.
200.
Okay. 14,200 should be transferred to bank account. Wait, here we have put two bank account. No, we need to show it in bank. No, I forgot it. So we will write down A's P capital, P's capital to Q's capital. What is the realization value? 25,500. 17,000 is bought by them. Now, banks R has recovered only 300 to R's capital. Then next here I put the bank value. No, so by P's capital value 14,200. 14,200 is the value. Now come to the part of Q. Q is 25, 32, 42. Is
Yes,
it right?
sir.
42,000? Yes.
Yes.
42,000. So on that 42,000, subtract 17,000 is gone. So it is 25, 22, 24,200.
Yes, sir.
Yes, sir.
24,200 is the value over here. So write down by Q's capital account. How much? 24,200. 24,200. So, and I need to write it here also. Here I need to put remaining 600 now by writing by P and Q's capital account. In bracket, it is a deficiency loss. It is not deficient. He may not able to insolvent the value of 900. He may only able to bring 300. 300 is a realized value or a recovered value. Remaining 600 is a deficiency. That deficiency should be borne by P and Q in the respective capital ratio. So that we have put the value over there. Now everything is get tallied. Now try to check by closing the cash and account. Calculate the value. Is 59,600.
Yes, sir.
59,600.
Debit side it is getting tallied. 59,600.
600.
Without entering this also, without doing this entry, whatever I have written, let's bring the cash. Okay, without that entry also, you can also do the sum if the question is silent. Here, they specifically tell P and Q were solvent and able to bring any cash required. Okay, for that purpose of the matter we are doing. If the question is silent about the rule 1, if they say follow Garner versus Murray rule, we need to follow rule number 1, we'll rule number 2. In some cases, if we are not obviously needs to follow rule number 1. if there is rule number 1 is there, if you are going to ignore, in notes you will write down rule number 1 of GBM is ignored. Like this you can do, and obviously you can do. How it will affect? It will never affect it. The balance may get changed, but the final cash and bank balance will get tallied, because debit side you are having 25,500. On the same side, credit side you are having 25,500. Both will get tallied. Suppose bar, this 25,500 I never put. This 25,500 I have put. This 25,500 I never put. Okay, at the time my bank balance will show on the credit side. Is it right? Because my debit side will be higher, it will show it on my credit side, right? Partners capital account will show the credit side bank account. Okay, it means they are not bringing the cash. That's it. Even though the balance, even though your cash and bank account will get tallied, even though you are not pass this adjustment on the debit side, credit side adjustment should be there. On the debit side, based on the question, we will take a call. Are you able to understood? Shall I move to the next question?
Yes.
Yes.
Sir.
In the previous question, after solving the sum, you need to write 2 notes. One is PQR will bring cash to make good their share of loss of realization, but in actual practice, they may not bring in any cash, only notional entry will be made. And the second point is regarding Garner versus Murray. On following a Garner versus Murray rule, solvent partners P and Q have to bear the loss of due to the insolvency of a partner A. In which ratio? In fixed capital ratio, you should mention, because we are following a fixed capital system. Okay, now we will move on to fourth question on the topic of Garner versus Murray. In total, it is fourth question, but it is a second question under the Garner versus Murray topic that they have given. It is an interesting question, and many of the time they may ask you like this question. They may never give you what are the accounts to be prepared. You should prepare the necessary ledger accounts. So we have discussed. Amal and Bimal are in equal partnership. It means it is 1:1 ratio. Their balance sheet should as on 31st March 2021. Liabilities balance are given. Creditors account, Amal's capital account is given. But plant and machinery, furniture, data, stock, cash, Bimal's drawings is given. Here something is fishy on Bimal's drawings. Asset realized value is given. Some values are going to give you, and amount realization value. Amal's private exit is not sufficient even to pay his private debts. He has become insolvent. Where Bimal's private estate has only a surplus of 200. Okay, show necessary ledger accounts to close the books of the firm. As a chartered accountant or as an accountant, we need to show them what are the ledger accounts to be maintained. First, let us discuss what are the ledger accounts to be maintained in detail. Obviously, I need to prepare which are the 3 accounts is mandatory. Realization account, partners capital account,
Capital account.
cash
Cash
or a bank account. These 3 accounts are mandatory. And then, is there any accounts to be opened extra? It means we need to check. First, plant and machinery value they are given, furniture value they are given, debtors value they are given, stock value they are given, cash value they are given. Bimal's drawings only they have given. So we will show this Bimal's drawing in a capital account part. As it is withdrawn from the capital, we will show it in a capital account. Amal's capital they have given. Creditors account they have given. That creditors, they never say the realization value, right? What is the creditors realization value? They have never tell to you that.
No.
They never mention. So for the closing the books, in this question, we will prepare sundry creditors. Okay, we will prepare sundry creditors account. And if there is any deficiency, we will prepare deficiency account. We will prepare deficiency account. Okay, this is slightly a different question. In some cases, your cash and bank balance will not get tallied. I will show you how we will need to proceed. So basically, in this question, we need to prepare 5 ledger accounts. So first we will prepare a format, a basic format I need to prepare. Okay. So your first ledger account will be based on realization. Your second account will be based on cash account. Okay, in exam I will tell you, don't open blindly cash account. If they give cash here, open cash account. If they bring bank here, open bank account. If they give cash and bank account, prepare cash and bank account in the heading. Okay, third account will be partners capital account. Amal, Bimal, Bimal, AB. I will keep it as AB. Then this is your partners capital account. Next one is sundry creditors account. Because dissolution means what? Closing all the ledger accounts. What are the ledger accounts is not at all closed, we are going to close it. If there is any deficiency, at the time we will open a deficiency account. Okay, now we'll just do a posting. What is the first step in the process?
Transfer of asset.
Dismantling of the balance
Dismantling
sheet.
of balance.
Balance sheet. That will be plant and machinery, to furniture, to debtors, to stock. 2,500, 500, 1,800. Then cash is there. Go to cash account and write down to balance brought down. 200 is a cash. To Bimal's drawings. This drawing should be directly transferred to the capital accounts of the partners as it has been showing a negative value. So we will put to balance brought down. We will show what is the value over there, 550. Okay, all the debit side, asset side is gone. Creditors value 4,800 is there. As usual, we will post by dismantling by creditors account. As you can do it in two ways. As this account is not closed, don't close it. On the first introduction class, I tell you, no, first transfer the creditors value and then if it is necessary, go and prepare for realization. So for sundry creditors, we will open separate account. We will transfer by balance brought down. What is the value over there? 4,800. Okay. Amal's capital will go to capital account 750. We'll write down Amal 750. I will write down by balance brought down. By balance brought down. Dismantling of balance sheet is over. We are not going to focus on the balance sheet. Asset realized value is given. If you want to prepare a working note, you can prepare a working note, or alternatively, you can show it like this. Cash account, plant and machinery, furniture, debtors, stock. Plant and machinery 1,250, 150, 400, 500. Give me a sum of value.
2,300, sir.
2,300. 2,300. Go to cash account and write down to realization account. If I want to write, I will write down sale of asset, or I will write down 2,300. Next, expenses amounting to 175. So I will write down to, as it is a realization expenses, I will write down to realization to cash account expenses 175. The same way, the debit side I will write down to by realization. I will write down 175. Okay, and they said Amal's private estate is not even to pay his private debts. Other than partnership firm debts, it's also not. So it is become insolvent. Whereas Bimal's private estate has only surplus of 200. So he has only a surplus of 200. That 200 he will bring it to the company, right? He will bring it that 200. So we will post an entry in a partner's capital by bank account. By bank account. On the Bimal's account, we will put 200 over here. Next, we will write down the values on the cash account. We will write down to Bimal's capital 200. Okay, Bimal's capital 200 we will put. Next, is there any value needs to be shown? Yes, bring the cash, right? Amal's capital, everything we have discussed. Then This adjustment is done. Now it is purely about the closing of the entries. First, we will close the realization account. First, we will close the realization account. What is the value? Which side is higher? I think so. Debit side is higher. 3,000, 4,800, 4,975,
Yes, sir. 497.
4,975, 4,975. Subtract 2,300,
2675.
2,675. Should be distributed among the partners. Loss by loss on realization should be distributed to A and B, that is Amal and Bimal in 1:1. So divided by 2. It is 1,337, 1,338. Or you can alternatively put 1,337.5, 7.5 also you can put, that is exactly correct. For the purpose of this rounding off, I can do it. Here also I can put 38, here also I can put 37. Not an issue. Okay, by loss on realization, we will put this loss should be transferred to which account? Partners capital account. So we will write down to realization account. The values are 1,338, 1,337. That's it. Now close the cash account. What is the cash account value? Which side is higher? 2,500 plus 200. This 2,700. Here 2,700. Subtract 175. You will get 2,525. What is this 2,525? That's my question. When you pay the realization expenses, you are showing it on the credit side. Suppose when you pay the creditors, on which account you will show? Cash account. What cash account debit side means? It is the receipt side. Cash account credit side means it is payment side. Whatever according on the debit side is known as your receipts. Whatever you are writing on the credit side is known as your payments. So in that case, your 2,525 is nothing but your sundry creditors. That will be your balancing figure. On that sundry creditors only I am paying. Out of which 2,525, 4,800 out of which 2,525 only I am paying. So 2,525 is my sundry creditors. So this sundry creditors is to cash account. Okay. Now close the sundry creditors account. It is 4,800, 4,800. Subtract 2,525 from this.
2,275.
2,275. Now tell me, either I can recover this sundry creditors or I cannot able to recover. The sundry creditors I need to pay or I should not need to pay. What is it for me? For that purpose, this 2,225 will be transferred to one new account called deficiency account. So I will open a deficiency account. Deficiency account on the credit side, I will write down by sundry creditors. I'll put 2,275. I'll put 2,275. Next, sundry creditors is done. Now close your A's and B's account. What is your A's and B's account will be there? Calculate the value. It is 1,338. Here it is 1,338. Subtract 750 from this.
588, sir.
88, sir.
588. Then 1,337 plus 550.
188, sir.
1,887. Subtract 200. It will become
1687.
1,687 is the value. So if it is appear on the credit side, it is your deficiency. So you will write down by deficiency account. A deficiency account should transfer. So this is a transfer entry you will pass. So you will go to deficiency account. On the debit side, you will write down 2 A's capital. That is 2 Amal's capital, 2 Bimal's capital. Amal's capital account is 588. Bimal's capital is 1,687. Tally. Both should get tallied. Is it right? 1,687 plus 588. 2275.
Yes, sir.
So 2275. So whenever a necessary ledger accounts is asked in a question, most of the question you will prepare one new account called as deficiency account. On the deficiency account, I have a surplus of, I have saved. What does it mean? in sundry creditors 4,800 I have credited. I need to pay 4,800. But what I actually pay 2,525. The remaining 2,275 is my gain or not? Is my gain or it is a loss for me?
Gain, sir.
Gain.
Gain, sir.
That gain, if it is a deficiency account, that gain in the sundry creditors having a debit side that is transferring to a deficiency account, having a surplus amount that is 2,275 on the credit side. Okay, on the 2,275, I will tally my partner's capital. That partner's capital having a deficiency of 588 and 1687. Okay, out of which Bimal only able to bring 200. Okay, the deficiency of A, none of them is going to recover from this. So this 588, I will recover from a surplus cash. For that only, for that purpose only, the notional entry is not, that is only simple notional entry. Okay, we are not actually posting an entry. This 588 will be taken care by the sum of the assets which is sell. Because for the liability, I need to pay 4,800. I have ready with my 4,800, but I have got some discount. I am only paying 2,525. The remaining 2,275 is surplus for me. That surplus will be taken care to set off my deficiency. So on the deficiency account, 2,275 I am posting on the credit side. The remaining, whatever the loss, deficiency loss I am facing from my partner's capital, that's to be taken care by the surplus, which I have gained from my sundry creditors. That's how the logic behind this. So whenever the necessary ledger account should be there, your deficiency account should get tallied. Are you able to understand? This is another interesting problem on the topic of dissolution of a partnership under Garner versus Murray. Okay, with this we will wrap up our session today. Thank you. Have a nice day.